Targeting new highs, the S&P closing in on a new milestone. We'll discuss and debate how to play the markets right now. Joining me for the hour today, Josh Brown, Malcolm Etheridge, Kevin Simpson, and Altimeter Capital's Brad Gerstner. He's with us for the duration today. It's his first interview since that big Invest America event at the White House on Monday. I'll show you the markets here. We still working to try and get something going today. You see the Dow is negative. You obviously have the Boeing overhang, given that horrible accident over in India today, and that stock's down. S&P, NASDAQ are in the green. Watching all of it unfold, Josh, we do have geopolitical concerns around Iran. We have the dollar hitting its lowest level since March of 22. Yields are down. It's a bit of a risk-off feel, I think you could say. PPI cooler. Jobless claims, though, still sitting at the highs since October. How do you see things?
Yeah, I think that's exactly right, Scott. Look, the dollar is going to be this story that just exists in the background, and on some days we won't pay any attention to it at all, and then on other days they'll see international stocks rally, they'll say, oh, look, lower dollar, portfolio asset allocation is working again, and that'll be somewhat exciting for people, but I don't think that that's going to be the primary driver of what happens in the second half of this year. I still think we're stuck in this paradigm where the Fed feels it's not obligated to act or should not act, and it's exactly where it should be, and we have this stasis on interest rates, maybe one cut, maybe two. But while that's taking place, we are looking at labor market softness, and we're seeing deceleration in the real economy away from AI spend. That's the push and pull we've been in for a couple of months now since the market bottomed. I really don't think that's going away. So yes, lowest level for the dollar since February of 2022. It's a drop of 11% versus the basket year to date. It's notable. We understand some of the reasons why. There's a lot of stuff happening with tariffs and with the tax bill that is possibly making people overseas rethink their allocation. I don't think that's going to be like this massive catalyst, though. I think that's just like a background thing. The bigger catalysts are all going to be about the economic data and the earnings front.
March and April wasn't that long ago, and I remember fielding phone calls from people who were concerned about where markets were headed. I heard a lot of argument about this time feels different, and we're looking at a president who's proposing to reverse course once again on trade policy and potentially ratchet up tariffs once again. So I think anybody who was concerned back then and was seriously considering trading actually did trade to get out of the market. All of those considerations that existed back then could potentially exist still today. And so I think it's a good time, because the markets have recovered so quickly, for people in that position to at least be de-risking parts of their portfolio as we go forward, just in case. Like if you were seriously considering leaving this market then, a lot of the same factors that existed then still exist today. And I think you might at least do yourself some justice just de-risking some.
We're 1.8%, Kev, away from a new high on the S&P. We getting there and then beyond?
Shockingly, yes. I mean, I think that the risk is still to the upside, and it's amazing how far we've come in such a short period of time. I love Malcolm's idea of hedging, and it's something we always do. So we're expecting a little bit more of a range-bound market, maybe a little bit more upside. And for us, it's about writing covered calls, being very careful about where we're putting risk on. But much like Brad, we're 90% long, Scott.
Yeah. Brad, do you think the market in some respects has desensitized itself from all of the trade war stuff? Just assuming, based on prior activity from the president, that the tariffs are going to be rolled back eventually, that China has a lot of leverage of their own, and that's how the Wall Street Journal editorial board plays it, that they say Trump has no China trade strategy. This gets to the larger problem with the tariff strategy. That is, he doesn't have one. His latest walkback shows he can't bully China as he tried to do in his first term, that China has the leverage. Now, you may think, is that a good thing for the investment community? Because he's not going to, he being the president, is not going to get to the most extreme levels again on the tariffs, and therein means that you should stay bullish.
Well, I mean, listen, let's separate strategy from tactics, right? What I think we talk a lot about on these shows is tactics, right? And those are negotiating tactics. Where does he anchor his position? Does he anchor it way over here only to negotiate away from that? I actually think the art of the deal lays out pretty clearly what this president's negotiating tactics are. But the strategy is what scared the market earlier in the year. right? There was a question, is the strategy Navarro and truly replacing the Internal Revenue Service with $2 trillion of tariffs? If that had been the president's strategy, the market would still be down 20% today. But it became very clear to the market in the end of April and early May that, in fact, the strategy was what I described as the Besant consensus. And that's to get fairer deals, right, in order to re-onshore critical national industries, things like chip manufacturing. We just had this announcement out of Micron this morning, I think another $200 billion investment in the United States. So if you just step back and say objectively, it does appear to me that the president's got trillions of dollars of incremental investments in the United States. It does appear to me that we are re-onshoring some critical industries. And now over the weekend, we traded, right? It looks like China visas for Chinese students and other things in order to get the ban on rare earths by China lifted. And so those I put in the bucket of tactics. If the market thought for a second that we were going back to this onerous strategy, right, of $2 trillion in tariffs, we would not be where we are today. The market is only up 2% on the year. We have come a long way off of that bottom, but it's become very clear that we're headed in a different direction than the market thought we were on Liberation Day, when the president showed that poster board of all the tariffs that frankly terrified the markets.
Yeah, you know what's funny, Josh, is, as Brad said, we're up on the year on the S&P 2.6%. It feels like it's like 20%, because we're so far off the bottom that many people, when we went down to those depths, were like, what in the world's going on here? This is not what we bargained for. We totally didn't expect it. And now we've had this tremendous rally that we're trying to now make sense of. If you look at the year-to-date scorecard, it doesn't look impressive, but it is if you take these prior 5.5 months in the total.
I think the revelation was that the only negative lingering out there for markets was the trade war. And so, like, once you dialed that back, it was like, oh, okay. It was almost like playing street hockey with your friends as a kid, and there's a car coming, and you got to move the goal, you got to move the nets onto the lawn, wait for the car to. Everyone's a car. Okay, so once the car passed, and he's like, oh, you know what? Actually, we're not doing 145%. Maybe it's 80. I don't know. Maybe 30. Ask Scott B. That tweet, that's all you needed to see. Oh, we're not going to do the numbers on that poster? That was just for, I don't know, the lulz? Okay, car is passed, bring the hockey nets back on the street. That's literally what happened. It didn't hurt that simultaneously we got incredible earnings growth from the Mag 7 names, which dictate what the index does, but then also for this second tier of technology companies. And actually, if you look, the software ETF is what's leading the market this year. If it has an ARR business, it's up double digits. That's like just period. Go look at where the winning stocks are. Netflix, Spotify, every cybersecurity name, which we could talk about later. Anything with ARR recovered really quickly. Here's why. Even if you had higher than expected tariffs or the trade war lingered for longer than you thought, people don't just start canceling contracts on their vendors. Things have to get really bad for these ARR businesses to see the type of massive cancellations that would lead to them having to reduce their earnings guidance for the year. And quite frankly, the Liberation Day to the taco didn't last that long. So all of these ARR stocks, whether it's ServiceNow or Workday or Cyber, any of them, they immediately rebounded and then went on to make new highs. The takeaway should be, absent the trade stuff, we're in really good shape here in corporate America. Companies are very good at passing on higher costs, and these ARR businesses are absolutely smoking. And that's the bottom line. It's all you really need to know about 2025.
Hey, Josh, as to that point, I'm sitting here looking at this chart of software multiples. We're still below the 5-year average on software multiples, right? It feels like we've come up a lot, but we came up off a very low bottom. And let me just give you one example to reaffirm your point. You know, we're shareholders in an incredible startup database company called ClickHouse. It's competitive with Databricks. We're also big shareholders of Databricks, and that's competitive with Snowflake. We're also big shareholders in Snowflake. All three of them are simultaneously accelerating, right? Because they're all critical to AI. And that's the story. There is an AI super cycle going on here. The AI super cycle is larger than the internet itself. It is the biggest technology wave of my lifetime. I've been investing in Silicon Valley for 25 years. That is what's happening simultaneously. If that was not happening, if the fundamentals were not strong, then this backdrop wouldn't have such a ferocious force to it. But what I'm telling you is the second that the government made clear that it was pro-growth, which is what we expected on January 1. We didn't expect high tariffs on January 1. The second they got back to that business, lower regulations, lower tariffs that are reasonable, a pro-growth reconciliation bill, and now potential rate cuts against this backdrop of this massive AI super cycle, I have to disagree that we should not be hedging here. We're only up 2% for the year. With that level of clarity, I think you ought to be leaning in here and ignore the fact that we just bounced off of a very low bottom because the world has changed.
About data center, not to mention the billions that the company is investing around the globe. You own the stock too.
Yeah, it's I would say at this moment, it's my favorite of the Mag 7 names. And obviously AI and data centers are a really big part of that story. I just think there's still a lot of money that could come into the name as they start to pull the levers that they are able to pull. And we're starting to see like the real-time results of all of this CapEx. And it's not just about we have to invest now for 3 years, but it's like, no, you don't understand. We're investing now because right now the activity is happening. The land grab is in full effect. I think one of the things that we have to continue to remind ourselves is that the tariff-related situations in the stock market, most of them are not Apple. Most of them are just not terribly important to what the index does. So, and those stocks that have a tariff issue have already been punished. We have just seen absolute whippings in the apparel sector. Look at Nike. Nike is in addition to all its other problems, is a tariff problem. And so it's not as though we're not pricing in these issues. It's that until now, they just haven't affected NVIDIA, haven't affected Microsoft, and they may not. We don't know. So NVIDIA took a massive write-down on China-related stuff, and the stock rallied. So, we are pricing in the impact of the trade war. We are pricing these things in. It's happening on an individual company basis rather than a market-wide basis. And the reason is the biggest market cap companies that are providing most of the earnings growth for the S&P 500 based on bottoms-up outlooks are not going to be affected by tariffs until tariffs spill over and become like an unemployment story. But that hasn't happened yet. So we're kind of in this stasis, and what we have is effectively earnings growth coming from the most important and the largest market cap companies.
Go ahead.
Would you agree that the issue with Amazon's share price, though, specifically as also a shareholder who thinks it's probably the best stock in the Mag 7, the issue may be that investors are considering this an e-commerce play and not paying enough attention to the underlying tech components that you just laid out?
All of the earnings growth is coming from AWS. So if you see the stock rally, it's because people are bullish on AWS.
Not to mention the fact that when I was having the conversation with Matt Garman, and the way people are framing to your very question and to Josh's point, is that AI, as some have written, Amazon wants to be the marketplace for AI. Josh Brown has two new buys. Number one, JOBY. It is Joby Aviation. Why did you add that?
Okay, so these are super speculative. Joby is, so let me talk about both.
Go ahead. Talk about both because they fit together.
Yes, Joby and the other one is Archer. I took starter positions in both of these names. They probably shouldn't even be public. These are pre-revenue, obviously pre-earnings situations, but they are working on something that I think has massive potential over the next 10 or 15 years. I don't know if this is the best possible timing, but it's my timing. So basically what's happening is this. There's something called the low altitude economy. And Adam Jonas at Morgan Stanley, who covers Tesla, put out a massive report on the low altitude economy, meaning sub 1 mile above the Earth's surface. So delivery drones would probably be the first thing that we're seeing or we will continue to see. But where that's going to go next is transportation. And these are two stocks that have a couple of $1 billion in market cap. And they came through this window of the 2020, 2021 bull market for experimental technologies. And that's the only reason why you can invest in them now in the public markets. There's a lot of risk here. These are highly speculative. We don't know if either of them will ever be able to commercialize a vehicle. But here's what's happening with them, and here's why I'm excited about it. Donald Trump just signed something that removes a lot of the red tape for testing these technologies out. Effectively, it's a combination of an airplane and a helicopter. They want to do what's called vertical takeoff and landing, VTOL, as opposed to conventional takeoff and landing, which is with a runway. If they can get certifications, which is the next catalyst over the next 6 months to a year, I think there will be a revenue model. In the case of Joby, this one is 9% owned by Toyota. It's got a lot of other high-profile investors. They're building out the Uber of the skies. They want to build a taxi network. In the case of Archer, they've got a prototype called Midnight. You can look on YouTube. They just managed to do a conventional takeoff and landing that works successfully for the Midnight vehicle. That one is not looking to launch a taxi service, but looking to actually sell these. I think the most obvious use case is highway traffic accidents, getting people lifted up and to a hospital immediately. Eventually, they'll take us to the Hamptons. But again, these are very speculative ideas. I don't recommend people with a low risk tolerance even consider them for their portfolio. I have a very high risk tolerance because I'm gully like that. And that's why I started a position in them this week.
All right. A new stock in his best stocks in the market list, and it is?
I'll keep this really brief. We've talked about Zscaler on the show. We've talked about CrowdStrike. We talk about cyber almost all the time. These are the best stocks in the market as a group. And Palo Alto just hit the list. So this is the largest by market cap, slightly larger than CrowdStrike. I think it's about 130 billion-ish market cap. And if you look at a longer-term chart, guys, help me out here, please. What you'll see is that the $200 level has been resistance for quite some time. There it is. If you're a pure technician, you're not just pulling the trigger and anticipating the breakout. You're actually waiting. But I think if you're an investor, this name belongs on the best stocks list. Nikesh Arora, who's the CEO, is one of the most respected figures in Silicon Valley. This is actually a 20-year-old business, and they have been ahead of the curve now for decades on cyber. I think that will continue to be the case. So if you like the theme, this is sort of a blue chip in the space. Personally, I'm long CrowdStrike. I don't want to own two. But this one looks like it's going to break out. This is a potential breakout in progress. And, fundamentally, what a great earnings story. What a great business. So just wanted to spotlight that for those who like it.
Thank you. You have some moves. Let's get to. You sold Texas Pacific Lands and you bought Elf Beauty. Tell me about that.
TPL was a fun trade for us in our growth strategy. We made a lot of money on it early when we made the initial position at around $950, ran to $1,400, $1,600. We sold a bunch of it. Then things have just rolled over, Scott. We basically got stopped out this week, rotated into Elf Beauty. Maybe a little bit late on that name. I think it's up like 70% this month. 25 consecutive quarters of growth, 28% year-over-year revenues. We're really excited about the position.
Bought more FTX or RTX?
Yeah, this was in our dividend strategy. We had a lot of money from dividends and option premiums through April. We wanted to add to the defense name. Hopefully it won't be a pop because of geopolitical events over the week.
All right, crypto on the brain. What's your final trade?
I'm going to go with JBL. It's 52-week highs today, riding the AI infrastructure wave.
Malcolm.
I'm going to go SoFi. You heard Josh talk annually recurring revenue. 40% of theirs is.
Josh Brown.
Kinsale Capital acting well for a small cap and one of my long-term holds.
All right. Market's still looking for direction, as you know, today. Dow's only up 0.01%. Here's the S&P, NASDAQ. I'll see you on the closing bell with.
Hello, everybody. Welcome to Blue Cloud Trading. My name is George. It is Thursday, June 12th. Another episode of the Halftime Report. Josh Brown, guests, sharing their thoughts on the markets, sharing their thoughts on some stock picks that they like. And we're going to cover 15 of those stocks that they talked about. So there's basically, you can see the list right here on the left. Netflix is one of them, Snowflake. You got Palo Alto. We're going to take a look at the indices because they did talk about those as well. The Dow Jones, the Russell. We're going to look at the FEZ, which is a European stock ETF. We're going to take a look at the Mag 7 stocks. Some of them were brought up on the show. We're going to take a look at a couple of stocks here from our members that were requested. I'm not going to cover the sectors today, but I will cover them in the next video. So let's get started here, because there's a lot of stocks to go through. And let's take a look at the markets first before we get started. Let's see how they performed. You can see that 3 of the indices were up. The Dow was up 0.24. NASDAQ up 0.24. Wow, that's interesting. Exact. I've never seen that before. 0.24% there. And then the S&P 500 up 0.38%. Russell 2000 was down 0.40%. Not good for the Russell. The heat map here shows us how the stocks performed for the day, and you can see that once again Tesla was down. It was down yesterday too, down 2.24% today. AMD was down today. You can see GE and Boeing was down. Google, Meta down. But Microsoft, Nvidia, Broadcom, Oracle. Look at Oracle up 13.31%. Big move for Oracle today. The utilities did really well today, and so did the healthcare stocks. You can see that there. This is the sector performance for the day, and you can see for Thursday, utilities was up 1.16%. So that's a big deal for utilities. Consumer cyclical down 0.56, communication services down 0.56, and then for the week, it's energy is the winner, up 5.46%. Now, what we're going to do here, this is my channel, Blue Cloud Trading. If you haven't subscribed, hit that subscribe button and like button. And if you want extra content, click the join button right there. It will give you access to these member-only videos where I go over my entire portfolio, if you decide to do that. You'll find many videos here, and most of them are about an hour long, so there's a lot of content there. Let's take a look at the stocks now. We're going to start off with the indexes. We got the Dow Jones here, up 0.21%, and we're using the Ichimoku cloud. For those of you who are new to this channel for the first time, maybe you stumbled upon my channel today. This is a new experience for you. You've never seen any of this kind of stuff before. Maybe you don't even know anything about technical analysis, all right? So what I'm essentially doing is I'm using this indicator here. It's called the Ichimoku indicator. Consists of a cloud, some moving averages here. You get the 9, the 26, takes the midpoint of each of the candles, all right, and then projects it. That's why sometimes it will be flat. And what we're looking for essentially is for price, okay, that little Japanese candlestick there to be above the Ichimoku cloud. We want it to be above the 2 moving averages. We want to see a bullish cloud in the future. How do we identify that? It's when the Senkou span A, which is that light colored blue line, is above the purple. We don't have that yet here on the weekly time frame. All right, and the Tenkan-sen, the faster moving average, should be above the red line there. It's not there yet. And one final thing about this indicator is the Chikou span right there. That's the closing price. So 26 periods into the past, it's projected as a line, okay, instead of candles. And so what we do is essentially look to see where that is in relation to the candle 26 periods ago. If the white line is under, it's bearish. If it's above, like it was over here, it's bullish, okay, for the ETF or stock, whatever it is that you're analyzing. So this is the weekly. Let's take a look at the daily time frame. It looks very bullish. So here's what we're looking for. Like I said before, Senkou span A is above Senkou span B. Price is above the moving averages. In fact, we also have the 200-day moving average imposed here as a dotted yellow line, and we just recently crossed above that, right? And it's continuing to move up. So this is very bullish territory that we're currently in on the Dow. How about the FEZ? This is the Eurostoxx 50. Also, this one's on a tear, right? It was up 0.55% today. Looks pretty good. I like what I'm seeing. So with that understanding, okay, it's basically saying, all right, it's okay. It's relatively safe to be in the market here. Now, anything can happen, but right now, the direction of the market is very bullish, okay, and we're not seeing any danger signs quite yet. When do the danger signs start to take place? Well, if price starts breaking through the moving averages, like it did right there, you can see how that led to a big drop. it doesn't always materialize. Here's an instance where price got under the Tengensen and it bounced right back. All right, so the majority of the time it's going to bounce, and it's usually going to find support at the Kijinsen, the red line, the 26 period. So think of that as a backup support level. But when it breaks through that, it tends to drop a lot. You can see here, if I measure from that point right there, or even up here where it closed into the Tengensen, and to that very low right there, that was a 15.25% drop of FEZ within 19 days. So here's the Russell 2000. This one here has stalled at the 200-day moving average and pulled back. Like I said before, this is yesterday. We talked about this one. We got a doji, then we had a bearish engulfing pattern, which consists of two candles. It's when you have a large red candle followed by a smaller bullish candle, and it looks a little bit like this right here, the bearish engulfing. Okay, that's a bearish negative pattern. We don't want that. We don't want to see those. Those are not good. So it's pulled back. Now we've got a bullish spinning top. One of our members asked me, like, okay, so what if we have a bearish situation taking place in the past, and then our most recent candle is bullish, like this one, which is a bullish spinning top? Well, now the dynamics have changed. So for tomorrow, at least, when we're looking at a daily time frame, all we can do is kind of predict what the next day, what the higher probability is for tomorrow, and it looks like it's going to probably be bullish tomorrow, based on this candle. And again, that's what we're using candlestick patterns to identify these types of situations here. Like right there, there's a bullish spinning top, a wick on the top that's equal to the wick on the bottom, and you get that little, and that's a bullish single candle pattern. There's so many patterns, and it's hard to like memorize all of them, but these are the key ones right here. And if you want to get basically a copy of this for free, you can find it on my Twitter page on x.com. You can find me there on @BlueCloudTrader. Okay. All right, so let's continue here. So Russell 2000, I think, yes, it's stalled here, but it's overall the pattern is pretty bullish. So I like what I'm seeing with the Russell, except for the fact that it is pulling back now, right? So this is not, as long as it remains under the 200, I wouldn't really be jumping into this. And one more thing to keep in mind is I also like to look at 2 time frames. Typically, I like to look at the weekly chart as well. And right now, it's been stalling right under the Ichimoku cloud right there. That's a level of resistance on the weekly chart. So I would stay out of Russell. The other indices are much stronger, because if we look at the Dow, you can see that's above the cloud. So is FEZ, so the Qs, and the SPY. Okay, Russell 2000 is the weakest. So let's look at Qs right now. Here's the daily chart. Very strong, very bullish. Candles are just moving in a very actually very slow but methodical uptrend, right? We've got ourselves a nice little pattern right there. We call it an up channel. How about the S&P 500? Same thing. Okay, and the VIX, which represents the volatility in the markets, that's dropping. I'm sorry, I take that back. That popped a little bit up, 4.4%. But overall, it's been dropping since the spike back on April 7th, when basically they came out with that tariff announcement that led the markets to go. Actually, it happened over here. I'm sorry, I take that back. April 3rd, right? April 3rd was the announcement, and that led to that big spike. And since then, the markets have cooled down a little bit. The volatility has, and that's led the markets to recover, essentially. So when this is dropping, this is positive for the markets. Let's take a look at the CNBC stocks now. We're going to look at the stocks they talked about. They talked about IGV, which is a software index fund. That's doing pretty good here on the daily chart. Looks good on the daily and on the 2-hour as well. Netflix. Let's look at Netflix. Netflix is down 0.40% today. 3 days in a row under the Tengensen. Overall, though, the trend is pretty bullish for Netflix. Okay, so I like Netflix on the daily. Snowflake is now this one here has some negative, fundamentals. Like the profit margins are negative 36.43%. EBITDA is negative 355.6. But overall, like you can see, once it price broke through the Ichimoku cloud, it led to a nice move up, and it has not actually closed under the Tenkan. Even right here, it found support. So I like Snowflake on the daily. If you're trading this based on technicals alone, you can see that there is certainly demand for this stock. JOBY is aviation. Now this one, Josh Brown bought this recently. He even mentioned that it was a highly speculative type trade. It's in the industrial sector, airports and air services industry. JOBY aviation. So now, would I have recommended it here? No. This is a gravestone doji. That's a negative. So this is a perfect example of what I'm talking about. When you see a negative candle like this, it tends to lead to a drop. Okay. Here's a nice trade right here where price gapped up, closed above the prior low, and then you can see it moving up. Now this is a reversal candle, and as you can see, it dropped. The gravestone doji, you can find that also on that pattern reference sheet. Yeah, it's right here. So very flat little body, and then you've got the wick standing up like that. So it kind of looks like a gravestone in a sense. Easy to identify, that one. Anything that has a long wick, any candle that has a very long wick on the top is typically very bearish. There's another one right there that led to a decline. That one's not that long, but it did lead to a decline. Here's another one, long wick. Look at that decline. There's another one right there. All right, so these are really negative. Now, if you see a long wick on the bottom of the candle, however, that can be bullish. I'm just kind of going back in time here, trying to find I guess a sample here. Let's look at the weekly chart. Maybe that will give us a little better. I'm not seeing any right here. Yeah. But the weekly chart on Joby looks really bad too. I would not be jumping into this one. You can see here it's stalling. All right. PANW, that's Palo Alto Networks. This one here popped above the Tenkan and the Kijun, and it's looking pretty bullish. I like it. Here it is on the weekly chart. The cloud is becoming bullish once again for Palo Alto. Tenkan is crossing above the Kijun. The only thing that's not confirming this trade yet with the Ichimoku indicator, because it is a rules-based system, is that the white line there, which is again the closing price, it's not above the candle on the weekly. It is on the daily though, as you can see right there. So that's still all good on the daily time frame. RTX is another one that they talked about on the show, and I actually have a position in this stock. I added this one on May 19th, and it's still moving up, as you can see here. So, yeah, it's a good trade. JBL, Kevin Simpson's final trade back on June 12th. Wow, that was a long time ago. From last, I think I had it positioned over here, but it's actually from today. So from today's show, that was his final trade. It's an electronic components stock. So I do like this one. Let's take a look at the next one, which is ServiceNow. This one, as you can see, it's under the moving averages. And so it's basically more of a hold. It's essentially consolidating in this little range here. Once it breaks through to the top of the range, I think there's a chance of expansion. Probably going to reach, that's going to be the target, 1157.90. All right. How about Nike? Nike's inside the cloud. So one of the rules of Ichimoku is you don't place trades when price is inside the cloud or under the cloud or under the moving averages. You don't want to add new positions. You can certainly hold a position and see if it can, maybe recover, maybe bounce through and continue. But when it starts breaking under the Ichimoku cloud on the time frame that you're trading it on, I like to use both the weekly and the daily, like I said before. So I'm making decisions based on both time frames. On the weekly, you can see Nike is still in a very, very, very strong downtrend. And these can last for years. In fact, Nike, you can see how the Ichimoku would have kept you out of this trade since this date right here back in, in 2021. So if we just using the weekly chart, for example, and here's the advantage of using technical analysis. For those of you who are skeptical about technical analysis, it just kind of gives you a little bit more of an insight of where the stock is, what the strength of the trend is. Because, Nike certainly had some, if you go back to 2017 through 2022, right here, a big run. We're talking about 215% in 4.8 years. It's a nice run. But what happened? It doesn't really matter what happened. The stock dropped, right? There's a multitude of reasons why a stock will drop in price, and it can stay in that downtrend for a long, extended period of time. And until there is more demand for the stock, it's just going to keep dropping. What that means is your money's tied up, and it can be tied up for years. It can be tied up for decades sometimes, right? It depends. It depends on the stock. Sometimes they recover quickly. You have a V-shaped recovery. Sometimes you don't. So you can see here from that point, if I do a measurement, because there's a measurement tool here I'm going to use, I'm going to just bring it all the way down to this low. It has declined 66.9% in 3.3 years. All right. Now, the interesting thing about math is if you want to break even, just to break even, all right, we're going to have to make a big move up in the future here. And to get to that same level, all right, you're going to have to make a 200% return based on the price of $62.80 to get back to that level of 156. So, yeah. And so you could certainly say, you know what, I'm a contrarian trader. I'm going to go ahead and take this trade because I think it's cheap here. Right? The fundamentals are good. They're profitable. Everything. Their operating cash flow is positive. Their sales growth is 5.67%. You can look at all these things, but all of those things can apply, and the stock can continue dropping. It doesn't. You know what I mean? So there's other reasons why stocks drop, and it can sometimes be, again, maybe it has a little bit to do also right now with the tariff situation. You can see that big drop that occurred right there. Anyway, let's keep going here, folks. ADM, here's another one that's, this one dropped under the tank. It's in back here on the weekly chart on July 29th of 2025. And since that point, it dropped down to this level, about 51.9% drop in 2.3 years. Right now, it's recovered a little bit, so it's now only down 43% in 2.5 years. Still under the cloud, still under the moving average, the 200-day. Not a time to be adding here, in my opinion. What about Archer? Aviation. This was Josh Brown's. He bought this recently. He said that this was also a highly speculative stock. And this one, on the other hand, where it was under the cloud, it popped up, and you can see what's happened since, right? The demand increased, and now, since this breakout here, it's actually up 93.98. If I measure from that point right there, it broke the cloud. It's up about, actually to the close price is 82.85%. All right, so a big move. But remember, whatever goes up that fast can also drop quite a bit. Like if we measure from the high here, back in January 10th, 2025 to April 11th, it dropped 55%, okay, in 3 months. So if you can, that's why he mentioned, if you can handle the volatility of this stock. And, I would have a very, very, very small position in a stock like this. I would not hold a large position of my portfolio. It might be like a 0.0. I don't know. I don't even know how much I put. I don't even think I'd put 1% into this stock. It would have to be like 0.25% of my entire portfolio, maybe. Something like that. TPL, Texas Pacific Land Trust. All right, Kevin Simpson sold this one recently. Oil and gas, okay. It's under the cloud here on the weekly chart, so he made the right choice, the right decision to get out. It started to show weakness. The ADX, I'm using the directional movement index. You can see the ADX is moving up here. The red line is above the green line. It's not looking good here for TPL. I think it's more than likely to continue dropping. Here's a daily chart. You can see that, how it just, just dropped like a rock. ELF. Let's look at this one on the weekly chart. This was the stock that Kevin Simpson ended up adding into the portfolio. Now, I probably wouldn't be jumping into this at this level here because it's still under the cloud on the weekly. But if you're trading it as a more active trader and you're just trading it based on daily charts, which you can do, you can switch it to a daily and 2 hour. All right, look at that 2 hour time frame. You can see how once it broke through the cloud right here, got above the cloud, it's moved up 110.84%. That was in April of this year. Crazy. So this one has taken off quite a bit. It's still moving up. You know, who knows how much longer it's got. The next resistance level, actually, it looks like there's one right here. Actually, let me move this. That's the correct resistance level. The high of 137.19. That's what I'd be watching. Oops. Let's put that in there. So that would be a target that I'd be watching closely. Get rid of that one. The 137.19. How far are we from that? We're about 6.18% away from that prior high. It's likely that price might stall here and profits. Well, people might start taking profits. I mean, this thing is extended a little bit here. So SOFI is SoFi Technologies, and this one looks great too. I mean, this is Malcolm's trade on the daily time frame. It looks great. You can see what we have established essentially is a higher low here from the prior low, and we broke this high here. Okay, you can see that right there. So we're still holding above it on the daily chart. So we've got essentially like an ascending triangle pattern right there. Okay, that's what they call an ascending triangle pattern. I'll show you guys that right now on the patterns cheat sheet. So where is it? Right here. Okay, it's when price gets stuck in a horizontal level there, and you've got a higher low here from the prior low, and price breaks through that level. And that's essentially what we've got here with this one, because it was like a high right there. You could see these lows right here. Okay, and so it's up, it's moving. On the weekly chart, however, how does it look? It still looks pretty good. However, it's not perfect. We got the faster moving average under the slower one, and the Chico span is underpriced. So it's not really ideal for those, you know, who want perfection in their, like I do. I will only add positions to the portfolio that I have in the members only portfolio, where it's bullish on both the weekly and the daily time frame. So that gives me a little bit of I believe, an edge, because I'm buying stocks that are established in a strong trend on both the weekly and daily time frames. And that's what I share with members, right? So I also share daily trade updates if you become a Blue Cloud Legend level member. And so you, again, click on the join button on my page here and click this, Blue Cloud Legend, and you'll see the daily trade updates. I post those. All right, once you become a member, there'll be a new tab that pops up right here next to the posts, and it'll say membership. Okay. All right. Whoops. Sorry about that. All right, let's get back to, where were we? We were talking about KNSL. This was Josh Brown's final trade. It's been his trade since March. He mentioned it on March 21st show, on April 1st, April 3rd, May 27th, June 12th. So I'm keeping tabs on the days where Josh is recommending this stock. So he's been recommending this for a while. Now it's been kind of like stuck. On the weekly chart, you can see we're in a consolidation here. I personally wouldn't be jumping into this one because it's going to probably stay in this little area for a little while. It needs to break through. We need to see some momentum changes, and the momentum here is negative. Okay, it's not positive. So I'd hold off on KNSL. Here's the daily chart, just starting to like pop its head above the cloud on the daily, but again, I don't like this chart. It's just all over the place. It's not very conducive to an up move, in my opinion, based on what I'm seeing. All right, now Mag 7 stocks. NVIDIA looking great today. On the daily chart, it broke through. Okay, it broke through concisely and closed above that 143.44. At 145 it closed at that price, so that's very bullish. I think I could see it moving up a little bit more, another 5% or so, to reach the next target of 152.89 based on that high and that high. Okay, so two highs right there at the same level, 152.89. That's the all-time highs, and then we'll see what happens once it reaches that level. Let's take a look at Microsoft. By the way, Microsoft is another one I've been following and sharing with you guys. It broke through that monthly level right there. That goes back to July 5th, 2024. It's the 468.35 level. I was holding off on adding a position on this one because it was stuck in this little consolidation, but now it's proved itself. So I added a position earlier today. I shared that trade with members in the post. All right. Now, I won't be sharing this stock in future videos until I'm out of it. I'm only going to be sharing it with members, okay, because I basically just shared the stocks that are in the portfolio with members. All right. So just keep that in mind. In future videos, I'll still continue showing these other Mag 7 stocks. Let's look at Google. Google is still stuck here under the 176.77 level on the daily, but in recent, just recently it's popped through there. On the daily, it's not terrible at all. On the weekly, however, it is we got a shooting star, which is not a good candle. And Tenkan-sen is still under Kijun-sen. So, yeah, it's not the right time to get in. Tesla. All right. Down 2.24%. This is the weekly chart. You can see it's holding above the cloud still, barely. The faster moving average is still under the slow one. Chico span is still under price. On the daily time frame, you can see that little drop here. This happened, of course, after that, the fighting that's been going on between himself and Donald Trump. You can see the big drop that happened based on that news event, right? I'm sure all of you have heard about it. And right now, it looks like we're establishing what we've done is essentially here on the daily time frame is we broke this low, so we've got a lower low, and if this continues to drop, we're going to have a lower high here from the prior one, so we'll be in a downward channel, and that's not good. So that's the trend line that I'd be watching right there. And if it can stay above it, in fact, I'll just go ahead and throw that on there right now. So we can keep an eye on that one. All right, so and what you can do is right click, create parallel line, throw that at the bottom right there of that candle right here. Now you've got yourself your nice downward channel. You've got a support level on the bottom and a resistance level on the top. All right, just like we did back here. You can see once it breaks through, it can lead to a nice uptrend. All right, that was a prior downward channel. Amazon, and that's also in the patterns cheat sheet. And again, is it in here? Actually, that one is not in here, but it certainly is a thing. Downward channels. Okay, let's keep going. Amazon broke these downward channels here, and now it's in an upward channel. It's doing pretty good here on the daily chart. You can see it's up just 0.02%, but holding above the moving averages. On the weekly chart, it's developing a negative candle, so we'll see what that looks like tomorrow on Friday. That's important to wait for that. Remember, when you're looking at the weekly charts during the week, it's not going to be that candle is still dynamic. It's still in the process of forming, right? Until the Friday close, you won't know exactly what that looks like. I'm just doing the best assessment I can based on, what I'm seeing right now. But that's a spinning top, and that's not positive. Apple, still in a downward channel. All right. I'd say there we go. And it's actually accelerated to the downside. You can see that from that high right there all the way down. Okay, so that's not good, folks. I would be staying out of Apple for the time being. That's the weekly chart, and here's the daily. Let's look at the daily. It's under the cloud. Meta is above the cloud on the daily and still moving up. Kevin Simpson recommended that back on May 30th. Here is the weekly chart, looking okay, but a reversal candle is forming. Tenkan-sen is still under Kijun-sen. Okay, and this is the all-time highs here, 740.91. Okay, let's take a look at the final two stocks, and these are member requests. LHX. This is an interesting company. First of all, let me just say a little bit about LHX, or L3 Harris Technologies. LHX is the ticker symbol, sorry. L3 Harris Technologies. So what is it about this company that makes it interesting? The company has secured over $2 billion in contracts from the Space Force's Space Development Agency and the Missile Defense Agency for Missile Tracking Satellites programs, including the Hypersonic and Ballistic Tracking Space Sensor program. These satellites are being adapted for potential use in the Golden Dome system. You probably heard about that. You know, that's the new Donald Trump concept for creating some type of, like, you know, space security measure for missiles that could be flying into the United States. Anyway, we'll see what happens with that whole situation. It's going to be I'm going to read the critical perspective on that in a second. But AI. But the cool thing about this company is, you know, they have a lot of experience in this area, AI and machine learning integration. So the L3Harris is partnering with commercial AI companies such as Palantir and Shield AI to enhance the Golden Dome's capabilities. These partnerships focus on developing AI and machine learning technologies to create a collaborative autonomous network that can process data from hundreds of sensors and coordinate interceptors with high accuracy. This is critical for managing multiple simultaneous threats. So there is a critical aspect to this whole thing too. While L3Harris is well positioned due to its existing contracts and infrastructure, the Golden Dome's ambitions, scope, and untested technologies, example the space-based interceptors, raise questions about feasibility and cost overruns. Critics argue the project could prioritize contract profits over practical defense outcomes, though L3Harris's proven track record in missile tracking sensors suggests it will play a significant role regardless of the project's ultimate success. So that is, I found that to be an interesting, interesting information about this company. How is the company doing technically, though? Let's take a look at the technicals and see how they are. Now, I actually had a position in this back in, let's see, what day was that? We'll go back to the daily time frame. Whoops. Go back in time a little bit. It's a little while back. This must have popped up on my scanner. Okay, it was just a small profit that I made on that, 6.3% profit. Anyway, yeah, so this one here, on July 20th, it looks like I added this position back in June 7th of 2024, right there where it popped above the Tankinson. It immediately dropped and then it recovered, came down again, popped, and then we had this big red candle. So I ended up closing the position when it got under the Kijins in there for a 6.3% profit. Let's keep going here and see how this stock has done since then. It's actually moved up quite a bit since that time, but it also had a big decline here back in November 14th of 2024. You can see from the high, it dropped approximately 27.25%. So again, you can see how it doesn't, or under that Kijinsen right there, you can see how it makes sense to not be buying stocks when they're under the moving averages. And we'll just wait for the sentiment to change like it did right here. Price broke through the cloud. All right. I'm not the only person using technical analysis. And the cloud does a really good job in these moving averages in assessing, you know, like what's really happening in the overall trend, right? Because you can see here, we do, in fact, when price broke above here, we had a higher low from this low. We also broke through this level here, and then you can see the continuation to the upside now. All right. So on the daily time frame, I like what I'm seeing right now. It also broke through this prior high today. It was up 1.51% on the daily, but what about the weekly? This week it popped. All right, so this week this stock has popped above the cloud. We'll see if it can stay above it. There's one more day in the week, Friday. I think it's probably going to stay above that level. But the cloud is still not bullish on the weekly chart. But Chikuspan is, the white line is above the candle 26 periods ago, so that's good. So interesting. And then one more stock, Micron Technology Inc. in the semiconductor space. Here's the weekly chart. It's inside the Ichimoku cloud right now. I would not be adding a position here based on that alone personally. Here it is in the daily. It broke through that prior high of 114.80 and it's staying above it. So that's really bullish. The fact that it actually, you know, it pulled back. You can see those two candles right there. What happened was today, price got up back under that 114.80. It actually gapped down, okay, and then the buyers stepped in and pushed it right back above that level. So that's actually a very bullish sign from Micron on the daily time frame. Let's look at this on the 2 hour as well. You can see that little struggle where price has been kind of hesitating at these levels. So what I'd be probably watching is a 2-hour time frame to see, all right, how's this going to end up? Because there's a battle taking place right here. All right, it went from moving in a nice steady, uptrend here to basically, you can see that trend line has been broken. If I just draw a quick little trend line from there to there, okay, it was broken here. So now, can we break above this little symmetrical triangle that I'm seeing here on the 2-hour? If that happens and it gets above that high, I think then yes, we could see a continued expansion for Micron. Wow, covered a lot of stuff, and hope you guys enjoyed the video. Hope you guys learned some stuff, and remember, over the weekend I'll be doing another members-only video where I'll go over my entire portfolio. And if you want to see last week's video, like I said, I've been doing really well this year overall. I've had 1 week where I had a bad week, and that was the tariff week. You remember the April 3rd, the announcement. That was the one negative week, but basically the rest of the year has been very positive. In fact, if you go back into even older videos, and you can access all of those older videos, I've done quite well. As you can check that out as I share all the trades with members. All right, guys, have a good rest of the day or evening, wherever you happen to be. We've got viewers here from every country, and I'll catch you all in the next video.